Hi, good morning all. Let's wait for another 2 minutes to participants to join. Uh, Once again, good morning all. I welcome you all to our Relativities monthly webinar on payroll and taxation related updates. And I welcome Mr. Akash for this session.
Hi, good morning, each and every one of you. Thank you for joining today. And as always, we are very excited to have this monthly regular webinar on payroll, taxation, and compliance items. Just a brief to all of those who are new here. During the next 40-50 minutes, we discuss whatever is new, whatever new things have come up, new notifications, something that impacts either payroll, either compliance or taxation. So with that bit of an introduction, let me not wait anymore and let me start off. So today I thought we'll try to do a little different. Of course, that's a wrong question. All of us have fingers, right? The question was, how many of you can actually use your fingers? Are you guys attending on a laptop or on a phone? Because I thought, learning can not necessarily be through presentation or listening, but also through, various other modes. So today, I would like to concentrate a bit using Q&A mode in terms of, you can just type your options and answers. Is that okay with all of you? Can you do that? You can use the chat to post your responses, and I hope we can have a better way or a better method of learning. Of course, the end result is that we learn. So with that, wonderful. Thank you for all the responses that I'm getting through chat. That's very kind of all of you. Great. So let me start off with the first question. And I can assure you that all of these questions have an impact on how we either look at payroll or compliance or taxation. The impact is either now or it is going to be in the next few days or few months or probably few weeks as well. So the first question to all of you is, how is gratuity to be calculated in as per Code of Social Security 2020? And the options are last drawn wages divided by 30 into 15 or last drawn wages divided by 26 into 15? Your time starts now. Okay, good, wonderful. That's nice. B, 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 B. Okay, a lot of them. B. Yes, great. I'm just going to give a couple more seconds to all of those who are just entering, to all of them who are just entering this session. Once again, welcome. Welcome to the monthly update webinar on payroll, taxation, and compliance. And today we are going to use a methodology of learning, which is a little different from just having a presentation. The question is there on your screen. Just use the chat and respond, what you feel is right. I'm very happy to see that a lot of people are responding. That's fantastic. Let the responses keep coming. While I do that, now let us move to the answer for this question. Okay. Oh, I clicked too many times. Yes. So, earlier it was subjective. We could have it either way, but then now they have included a specific explanation which says we have to use 26 and then we have to multiply that quotient by 15. So that is something that is important to note, and all of you who have given B, hands on to you. Hats off to you. Now, the second question is going to come on your screen, and it is there on your screen right now. In which of these cases gratuity is payable as per Social Security Code? Okay, and the options are: 1. So you can post your options even if they are multiple. That's fine as well. So options: an individual is offered permanent employment but is separated in 4 years. Do we give gratuity as per Social Security Code? Second, an individual is offered employment only for a period of 3 years. Okay, so the question has deep meaning. Please understand the question nicely. The individual is offered employment only for a period of 3 years, and this is not as per the current Gratuity Act. I'm talking as per the expected code on Social Security. C, the individual has an accident and dies on a public holiday, which automatically means that the individual is actually not on duty. The unfortunate incident has happened when the individual is off duty and totally on the personal time of the individual. And then, that's actually D. The individual has an accident and dies in the employer's premises. So let's see what are the times. So the question is, in which of these cases gratuity is payable as per Social Security Code? Okay, that's the question, and all you have to do is say either A, B, C, or D, or probably a combination, whatever it is. Oh my God, did I actually leak out a bit of information? Let's see. Okay, I know. These are statements. You have to wet them a bit. Yes. So the last option is actually individual has an accident and dies in employer's premises. Sorry for the typo. It shouldn't be C, but it is actually D. Okay, I am trying to see what people are responding. Answer is C and D. Okay, D alone. B and D. Individual is offered employment only for a period of 3 years. Okay. And then D. Individual has an accident and dies in employer's premises. So let's, any other questions? I mean, it's okay. We don't know everything. So feel free to just post whatever you know. That way we'll have a good mix of conversation. Is it A? Is it B? Is it C? Is it D? Or is it a combination of A, B, C, or D? Either D or none. Okay. Interesting. Okay. So here is what it is. The answer is B, C, and D. The answer is B, C, and D. And I'll tell you why the answer is B, C, and D. So what the gratuity as per Code on Social Security says is that even if you hire somebody on a fixed term employment basis, right? Fixed term employment basis is when you make the hire, you actually fix a term. Let's say 1 year or 2 years or 3 years or 4 years. In a normal situation, they wouldn't be eligible for gratuity because they have not completed 5 years. But in as per the Code on Social Security, even FTE, fixed term employment employees, will be eligible for gratuity. So that is what is item number B. An individual is offered employment only for a period of 3 years, which means when you are offering employment, when you are releasing the offer letter or the appointment order, you are actually saying, okay, Akash, you are hired by Relativity to do these monthly webinars for a period of 3 years, and you will be paid XYZ. And your job is to give as much knowledge to the participants in an interesting way, right? So that's what our offer letters say. Job responsibility, what's our the various clauses. So B is definitely what the Code on Social Security takes up. Oh, what is C and D, right? What's the difference? Now, irrespective of where the employee dies, does not matter. Irrespective of where the employee dies, it does not matter. They are eligible for a gratuity, even if they have not completed 5 years. Okay. So this is also defined on the Code on Social Security, that you have a regular employee, and then 3 years down the line, an unfortunate event like accident on a public holiday, or there is an incident in the factory, in the premises, that the individual dies. They wouldn't have completed 5 years, which is required for gratuity, but that is only on normal cases. In these exceptional circumstances, death during any term, as well as permanent disability, is also supposed to be considered for gratuity. Now let's come to A. An individual is offered permanent employment but is separated within 4 years. So in this case, you are actually not hiring with the intention of a fixed term employee. You are hiring them with an intention of a permanent employment, and hence you would not mention from date and the 2 dates in your appointment order or on your offer letter. So in that sense, it is called as permanent employment, and if they leave before 5 years, they are not eligible for gratuity. So A is not eligible, B is eligible, C is eligible irrespective of whether they have completed 5 years or not. D is also eligible for gratuity irrespective of whether they have completed 5 years or not. Wonderful. So I hope all of you who have responded C, and D get to know that gratuity is not as straightforward as it used to be. There are a lot more cases and people coming up for gratuity. So there are I like that I can take questions on this topic right then and there. So let me take that. Tanvi Deshpande has asked, what is the period of employment? What if the period of employment is not defined? So that's permanent employment, right? You don't define a period of employment. You only define the start date, that is the date of joining, and then you just go on until both of the parties mutually agree. That is permanent employment. So for permanent employees, after 5 years, gratuity is happening. Shruti asks, what if someone is offered employment for 1 year? Hey, so you are offering employment on a fixed term employment basis, which means they are eligible for gratuity when their tenure of 1 year gets over. A regular full-time employment is not fixed. The term of employment like 3 or 4 years. That is right. Regular full-time employee is not a fixed term employment. That is absolutely right. So with that, let me anyway, we discussed the answers. Gratuity is not applicable only in the case of A, but in the case of B, C, and D, gratuity has to be paid. And this has to be paid within 30 days as per the Code on Social Security. And even today, as per the Payment of Gratuity Act, we have to pay it within 30 days. And do you know another development I just remembered? That the gratuity, chapter 5 talks about gratuity in Code of Social Security. It mandates that every employer should have gratuity insurance. It mandates that every employer should have gratuity insurance. Okay, so remember that. So which means if you have more than 20 employees, you are already within the ambit of the labor law. In that case, right now, it is at the employer's option. You can either have a gratuity scheme or a gratuity insurance with any insurer, and then you pay to the insurer, an actuarial valuation is done, and then you pay the premium to the insurer. And when a claim for gratuity comes, the insurer makes the payment for the claim. You don't pay it out of your own pocket. This is one method. And the other method is companies actually pay out of their own pocket. They don't have an insurance or an insurer to manage the gratuity, or they don't even have a trust. So in that case, the employer takes care of the gratuity liability. This is usually done by small organizations because they feel that whenever an employee leaves, paying gratuity out of their own, cash flow is better than managing an insurance policy. But this is strictly prohibited as per the new new Code on Social Security. The Code on Social Security mandates that every employer shall have an insurance policy for gratuity. There are a couple of questions that have come up. If a regular full-time employee meets with an accident, then in case of C and D will be applicable for gratuity? Yes. So if a regular full-time employee meets with an accident either inside the premises or outside the premises, does not matter. Whether it is a working day or a holiday does not matter. But then the eligibility for gratuity is waived off in case of death or permanent disability. And for how many ever number of years they have actually worked, you have to calculate gratuity and you have to pay them. Whether the clause of 30 days payable is there earlier? If so, top MNCs are taking 45 days to release a full and final settlement. Need your inputs. Yes, so there are rules with respect to within how many days gratuity has to be paid. And there are also rules with respect to, in the new code, there is also a rule within how many days full and final settlement has to be processed. So Krishna, that's a good question. I think the government has noticed that people take 30 days, 15 days, 45 days to clear off their liabilities. So as per the Code on Wages, the employer is duty bound to clear all, except gratuity. Everything else is supposed to be cleared within 2 days from the date of separation. Within 2 days. Now that's going to be a difficult task for large companies. But then this is the fact. As per the code, this is what is written. And in case accident, what is the time period the employee should have completed to be eligible for gratuity? No time period at all. No time period at all. Even if so, practically they should have at least completed 6 months, because only if the gratuity act says that 6 months, 1 year, the term of employment is like, consider every 6 months as 1 full year completed. So anything less than 6 months will return the number to 0, but anything above 6 months is what is practical. But otherwise it's very clear that there is no minimum requirement for gratuity at all, in terms of accident or in terms of death or in terms of permanent disability. What is the definition of full-time employee or permanent employee? Full-time employee or permanent employee is somebody who is provided, who is offered an employment which is not probation, which is not a trainee position, which is not an apprentice position. So everybody else, automatically categorizes as permanent full-time employees, until and unless you specifically mention, the word either FTE, that is fixed term employment, or you have a stop date for their employment, or you mention that, the first 6 months are your probation, blah, 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 all of that. So that's how it is. Gratuity is separate from FNF. Yes, truly, gratuity is separate from FNF. For FNF, we have only 2 days, but for gratuity, we have 30 days. What is the reason behind putting a mandate of employers taking gratuity insurance with an insurer rather than employer paying directly? Good question. See, what happens is, what if the company is sick and somebody has worked for 10 years, okay, and on the 10th year, when the employee wants to move for better opportunities, what if the company is actually sick? What if they are unable to make the payments? Unnecessarily, this individual who has spent X number of years with the company will suffer in terms of the gratuity payment. Yes, there are legal recourses. Such an individual who has not been paid gratuity can obviously approach the labor court and all of that, but that becomes a legal matter which most of these people do not pursue. Many times people don't even know that there is a legal recourse available. So to help employees, see, we are all learned employees. If you're attending this webinar, which means you are one among the 5 or 6% of employees who are blessed to be learned, to have access to all of these facilities. But rather look at the world around us, right? There are so many people who are who work at blue collar jobs, who don't have access to such information, who are predominantly driven, not driven through technology, and they don't even know what they're eligible and not eligible for. Yes, the world is changing, the world is becoming better. Trade unions are playing an important role in making sure the employer fulfills the liability towards their employees, irrespective of the employer's financial situation. But then we are not talking about those large companies. The large companies, they will find some way to pay. But what about those companies who have 50 employees, who have 100 employees, who have 150 employees? India is all about small and medium enterprises and small and medium businesses. 91% of India runs on small and medium businesses, right? And if that particular company, if that particular industry falls sick for a certain period, when the employee is actually leaving, the employee is put in difficult situation. So I believe that's the mandate for them to mandate a gratuity insurance. Okay, so there are some more questions. Do you want me to take the questions or continue with the quiz? Okay, Anyway, let me take the questions. They're interesting. If an employee is terminated on violation of code of conduct, is he or she still eligible for gratuity? Puvili, good question. That's Puvili, right? Yeah, Puvili. Good question. So there are specific reasons why you can not pay legally. You cannot pay gratuity. It's not a blanket code of conduct. It's not that. Reason number one could be because of sexual harassment, and that has been proven against the employee. Reason number two is misconduct in terms of causing a financial loss to the organization. In that case, whatever financial loss has been caused, that can be deducted from the gratuity, but the whole gratuity cannot be withheld. And then there is one more which I'm not very sure. I am not able to recall right now, but I can definitely make sure that I include that while sending. My team includes that. Divya, can you please make a note so that you include the third? There is one more clause. You can include that while you are sending this email. Suman asks, when an employee completes 2 years from the date of joining and 6 months is his probation period, will this be considered 1.5 years for gratuity, reducing the probation period? You're actually not supposed to reduce the probation period. After completing the probation, it is only the date of confirmation, right? The date of joining never changes, because probation is where you are evaluating. Both the employee is evaluating the employer, and the employer is evaluating the employee in terms of skills, in terms of competencies, in terms of behavior, blah, blah, blah. And then if everything goes well, you continue the employment, which means prima facie, the employment has already started on the date of joining, right? And this is the date of joining that you're also going to mention in your Provident Fund records, in your ESI records, even in your employee master records. So, probation period is not going to reduce gratuity. If employee is able to get gratuity, employee is able to get gratuity if he is not completed 5 years of his time period. If a permanent employee resigns before, the 5 years is not 5 years, it is 4 years and 190 days if you work for 5 days a year, and it is 4 years and 240 days if you work otherwise. So is the employee is able to get gratuity if he is not completed. So if it is a permanent employment and he has not completed 5 years, they are not eligible. Yes. So let me, thank you. Let me take the questions, and let me take the questions later. There are quite interesting things that we have to discuss. Okay. Next item, who will be covered under ESI once the Code on Social Security 2020 comes into force? Okay. Who will be covered under ESI once the Code on Social Security 2020 comes into force? And your options are these. No change, it will continue as it is. Employees earning less than 21,000 gross salary will be covered under ESI, or it will change. Employees earning less than 21,000 wages will be brought under ESI coverage. So option A, okay, A. Okay, B, there are 2 B's and a lot of A's. Let's see, there are 2 B's and a lot, okay, couple more B's, no change. No, not no change, Neela. Tell us, okay, no change is A, which means A. Okay, got it. Amal Raj says A, Sri Sailam says A, option A. Okay. So this is what the Act does. This is what a legal document does. Guys, you'd be surprised to know what the answer is. And I'm only the messenger, so don't get mad at me. I am not writing the Act. The Act only comes to you through me. I know, painful as it can seem, but B is the option. It will change. Employees earning less than 21,000 wages will be brought under ESI coverage. And you know what the wages is? The wages is 50% basic. That is what wages is, whether you have basic or not. So there are, the Act also mentions that there is this wage ceiling that has to be notified. It has not been notified yet. This wage ceiling is what is this 21,000? Okay. And then there is also a sunset period of 1 year, which means from the time the code on wages is effective, for a period of 1 year, the existing ESI rules and regulations will continue, and then we move on to the code on wages. The code on social security and all of that. So option B, if salary bracket increases. So your answer is option B. Very well. So this 21,000 is actually the wage ceiling. Okay. Right now, they have not announced what the wage ceiling is going to be. But what is written in the Act says ESI will be based on the eligibility on the basis of wages, not on the basis of gross salary. Point number one. Point number two is that the wage ceiling. So anybody up to that wage ceiling will be brought under ESI. And those people who are outside of that wage ceiling will go outside of ESI. So this is the answer. So all of those who said there is no change, it will continue as it is, as on today, as on what the Act says today. And whenever it is introduced, there is already a sunset period of 1 year. Until that, it will actually be ESI. So that's something that you should remember. Okay, the next question. Employees can claim medical expenses incurred for parents under Section 80D of 2. Health insurance for parents. So the question, the actual question is whether it is true or false. So state whether it is true or false. I would also like to recognize our participants who are there on YouTube. This webinar is being broadcasted live on YouTube, on Twitter, and on LinkedIn. So hello, all of you guys who are there on YouTube, who are there on Twitter, and who are there on LinkedIn. Though I can't interact with you personally, but then my request would be next time try to join our Zoom session. Okay, but that you are there today, most welcome to our webinar. Okay, so I see true. Most of them only if they are dependent. Yes, that is right. Yes. Okay, so not much of difficulties here. Employees can claim medical expenses for parents under Section 80D of 2, health insurance for parents. So earlier it was only Mediclaim, but now you can also claim medical expenses up to 25 or 50K, as the case may be, depending on whether they are senior citizens, whether they are not senior citizens, and such expenses should not be paid via cash. Yes, that's moving on to the next question, and I can certainly say that this is the last question in terms of the Q&A mode, and then we have 3 more updates to discuss. We are not out of time. If employer's contribution to PF plus NPS plus SAF exceeds dash, it is chargeable to perquisite taxation. Go ahead. A, B, okay. Yes. Okay, so while you guys are actually, responding, I'd like to say hello to some faces whom I've seen very regularly. I know Puvili and Sadan. Nagaraju is there. Ekta, Sri Sailam. Nice to see you today. Amal Raj and Deepthi as well. So thank you for joining our sessions regularly. If I've missed somebody, please put your hand up. I can say hello to you as well. But I don't. Okay, that's absolutely fine, Nikisha. This is more for us to get to know, right? Nobody knows everything, not even me. So, so there is this, perquisite taxation, provident fund plus contribution to NPS plus contributions to superannuation fund. If it exceeds 7,50,000, so it is 7,50,000. 7,50,000. So how many of you have said 7 lakh? Yes, we have somebody by name 1+3. I didn't know a phone was attending our event. 7,50,000, but I'm sure it should be either a gentleman or a gentle lady. Thank you for attending our event. That's the right answer. Komal has it right. Who else has it right? Krishna has it right as well. Kirti Bala has it right as well. Good. So that's 7,50,000. That is the limit for having it chargeable to perquisite tax. And with that, our quick 5 Q&As are over. How did you like? So before you go into the high scorers, tell me, was this mode a little more interesting? What do you think, or you think it's better to have a presentation? You just talk, you just listen, and then yeah, okay. Thank you, Kirti and Neela and Shruti. This is better. Yes, I believe. I believe there are different modes of how we can learn, and as much as we can get people to engage, we can definitely come there. Can the first 2 questions be recapped? Sorry, I joined. Yes, we will definitely do that, Srimati. What I will do is I have 3 more items to cover. So just give me about 10-15 minutes and we'll definitely take up that your request. So who are the high scorers? Out of 5. Anybody got 5 out of 5? 4? Come on, 4. That's right. You should consider joining our webinars regularly, and I'm sure you'll get 5 out of 5 the next time. Okay. Good. So let's quickly run through 3 very important updates that I want to share. Update number 1 is that all of you would have noticed from the last couple of weeks that there are, the whole passbook interface on the EPF has changed. So EPF has introduced a new passbook methodology to align with CBDT's requirement of taxing the interest earned on contributions exceeding 2.5 lakhs. For that, they have to, give us the passbook in a financial year manner. And then that is what they have done. So now each of us will have 2 passbooks. One passbook will have the non-taxable contributions, which is up to 2.5 lakhs. And once our contributions exceed that 2 lakh, is it 2,49,999 or 2 lakh? Up to 2.5. So once the contributions start exceeding 2,50,001, those contributions will start sitting in another passbook, which, so from there the interest will be chargeable to tax. Okay, so this is update number 1, which is very important. Just trying to see. Suddenly I'm getting 3. Oh, 3 passbooks. Are you saying that we have 3 passbooks? Joined for the last 2 and both are correct. But I thought it was only 2 passbooks. 3 answers are okay. 3 answers are correct, right? Okay, wonderful. Thank you. Going to update number 2. How many of you are from manufacturing sector, or you have, people whom you are hiring from NEEM, from the NEEM scheme? You guys are hiring somebody from the NEEM scheme, that is National Employability Enhancement Mission. How many of you are hiring from NEEM scheme? How many of you are from manufacturing industry, automotive? I mean, non-IT, ITES, non-IT, ITES, capital goods, mining, coal, petroleum, all of those industries where there is machinery and blue collar involved. Okay, so there are a couple. So then I will take 1 minute to explain what NEEM is. So National Employability Enhancement Mission is a scheme of AICTE, which was announced, I think, 4 or 5 years ago, which gave certain benefits to employers hiring people from the NEEM scheme, right? Certain employers, I mean, certain people who would be hired through the NEEM scheme would not be eligible for Provident Fund, ESI, all of those things, no gratuity, because they are typically not your employees at all. They were considered as student trainees. It was to enhance the skill set of students or of trainees just out of college and like that. So it's called as a vocation skill development scheme. But then a big Pandora's box has been opened, where the Provident Fund has decided to not exempt them from being classified as employees under Section 2F of the EPFO Act. So this effectively means that even if we have trainees under the NEEM scheme, and if we are not paying Provident for them, we are actually doing something wrong. So this is a bad news, a really bad news, because I know for a fact that there are so many industries who are hiring people through the NEEM scheme. It is working. There is a lot of opportunities that have got created. Of course, see, at the end of the day, the employer would never do something which is not beneficial to them, right? It's all about business. So through the NEEM scheme, a lot of people were hired, and it was all good. But now, just in the last week of February, this circular has come up, where it has been specifically mentioned that I have the extract of the circular. You can see in A, the NEEM trainees are not exempted from the definition of employee under Section 2F and the Regulation 15 of 2 of the NEEM regulation, which is the act which of the National Employment Enhancement Mission, is ultra vires to the provision of the act. So that's a real bad news. And you know what is the worst news? That to assess whether they are eligible or not, now the powers have been vested in the hands of the Regional Provident Fund Commission. No comments. Bad news. So if apprentice scheme is absolutely fine, apprentice, if you're hiring somebody under the Apprentice Act, absolutely fine, nothing, no changes there at all. But then this is what the NEEM, it's a big blow to the NEEM service providers, the NEEM universities, the NEEM institutes, which are actually providing people in bulk to to the organizations. Problem number and one, that they say it ultra vires, it means that now the RPFC is going to come back to all employers who are having NEEM trainees, and they're going to ask them to pay from the time the trainees have been hired, even retrospectively. So that's a real bad news, a bummer. I mean, clearly India needs to do better in terms of framing policies and acts. Update number 3 is that we are down to the last month. So I just like to give a bit of a highlight. All of you who are from finance, who are from payroll or HR background, for whom salary is important. I mean, you are responsible for disbursement of salaries. We are in the month of March, so this is our year-end activity month. The regular stuff is we collect tax proofs and then previous employment income and all of that, which happens regularly. but specific attention is definitely required for tax mappings of all the pay heads, because March is the only month, if there is any incorrect tax mapping, any section, any section 10 exemption which has been provided incorrectly to a pay head, then this is the only time when we can set it right without penalties or without interest. Right, so I request all of you to look at the tax mappings of all the pay heads that you have paid your employees during the financial year, even one-time payments and every damn thing that you can think of. And then the second thing that we as payroll outsourcing service providers do is we do a full year earning reconciliation, and we match it to the income on, we call it ITCS, income tax computation sheet or tax computation reports. So we match the full year earning reconciliation and then the March month's theoretical salary. We add that and we see whether this is what exactly is reflecting on the tax computation report for all the headcount. This is not only for your live employees. Somehow live employees, you can still do something. But let's say, employees have quit earlier, you've already processed full and final settlement, and then there is sometimes it just happens, there is some mismatch in terms of taxes, in terms of earnings not being reconciled. We can still fix it by March. So please do that for all of your headcount. And that is what I had to talk about, the year-end activities. And the fourth, less of an update, but more of a direction, that we all know that Part A and Part B is generated from traces, right? Part A has data from all the 4 quarters Annexure 1, and Part B has data from Q4 Annexure 2. Q4 Annexure 2. Okay, so in Q4 alone, we file Annexure 1 as well as Annexure 2. So all these Annexure 1 data is responsible for generating Part A, and the Annexure 2 data is responsible for generating Part B. Employee not in Annexure 2, you can't give them Part B. Q1 to Q4 Annexure 1 TDS data has to match the tax deducted data in Annexure 2. Otherwise, there will be a mismatch. And then the worst thing is employees may not even realize, but they'll go ahead, file their tax returns, and then at the end of the day they'll receive a notice, and then they'll start cribbing about it. So that's something that you can definitely think of in these items. We are aware that SSC, but there are some questions. Is there any change that UAN is necessary to generate ESIC number? So Arun has already responded. Arun is the guy at Relativity for compliance. So we all seek Arun's advice whenever it is important. Can be said so. So the Code of Social Security has been applicable already. Sorry, I missed. No, the Code of Social Security is not applicable yet. It is yet to be announced from which date it is going to be implemented, and all of that. Also, the wage code is applicable from FY 22-23, where we have to make basic 50% of wages. So that's the code on wages. So a couple of updates there is, I think, a lot of trade unions as well as employers have taken to the labor department the practical difficulties in increasing the basic, right? Currently the basic ranges between 25, which is bad, 30 is not bad, but it is between 30 to 40, and suddenly increasing that to 50% is a huge impact, particularly on those employers who have a huge headcount. Right, for smaller headcount also there is impact, but the impact is smaller. On the larger size, the impact is larger because of the huge headcount. So there is a proposal where the labor department may come out with a staggered deployment of this 50%. So at the end of 3 years, they want it to be 50%, but they may say, okay, in the first year, bring it to at least 60. Bring it to at least 35% or 40%. In the second year, they may say bring it to at least 45%, and then in the third year, gradually bring it to 50%. So that is at least the liability gets distributed across 3 years instead of one single year. Okay, that is as far as that is concerned. Kindly explain ESI wages as per SSE. So okay, so I'm going back. I think somebody also asked me to run through the first and second. I'm going back to ESI. Yes. So there are two things, right? In ESI, you have one, the eligibility, and then second is you have the deduction. Very simple. Please, a bit of concentration. Eligibility and deduction. So the first thing that we try to do is we find out whether an employee is eligible or not for ESI deduction. And that eligibility is on the basis of gross salary being less than 21,000. Yes, we all know. So if this condition is true, then ESI deduction will happen. I think the 0.75% and 3.25% employer, all of that on this 21,000. Now, what the Act, the Code on Social Security says is that this gross salary is going to go away. You will now have to assess this 21,000 adherence not with the gross salary but with wages. And we know what wages is, right? Wages has to be at least 50% of gross salary. That is what wages as per the Code on Wages says, which means there will be a lot more people who will come under the ESI eligibility. Okay, so it has to be the eligibility has to be assessed not on gross salary but on wages. Point number one. Point number two, the wage ceiling currently is 21,000. The 21,000 is actually the wage ceiling. This may change, they may increase this or they may reduce it, we don't know, but that is yet to be notified. But if it even remains 21,000, imagine there are a lot more people who will come under the ESI brackets than what we currently have. So that's the concern here. Okay, if 50% wages implemented, then gratuity leave, etc. liability, who will bear, or any calculation government introducing? So Narayanan, there is already we've done a very detailed webinar. You can look at our blog.relativity.co.in. That particular webinar's recordings are there. We have spoken in detail about the new labor codes and how they impact. I think Arun, if I'm not right, if I'm not wrong, we did that sometime in 2021, right? Something like that. So you can definitely look at that and stuff like that. Okay, so there are quite a few questions, but Arun is also responding. So there is one question which is not. If employer is deducting employer side of PF from total monthly salary, should we consider the actual wage or the value of deducting PF for considering eligibility of ESIC? If employer is deducting employer side of PF from total monthly salary, okay, should we consider the actual wage or the value of deducting PF? Oh, sorry, Shruti, I didn't get your question, but please do reach out to us subsequently. There's somebody who any other questions, happy to take them, and then happy to always contribute if you have any specific things. Okay, there is one. What is ATEE and ATEEA? I have self-occupied home loan interest. So shall I claim deductions that the interest both sections at the same time? So see, ATEE and ATEEA are certain additional sections which were introduced in a time period. Padmajyoti, are you here on the webinar? Padmajyoti, let Padmajyoti come. I'm sure she's here. She's trying to unmute herself. Sri Sailam, Padmajyoti will have we'll have Padmajyoti answer your question. But that's a good question. We'll have them answer. Please summarize all the main points. Yeah. So in terms of summary, I'd like to move the conversation, because we've already discussed about the question and about the answer. But rather, I would like to move the conversations to impact. So the first, let me go to first question. We'll quickly discuss what the impact is. Yes. So here, what is going to happen? The impact of this is that the per day gratuity value, the per day wage value is going to be higher. See, it's like 30,000 last drawn wages divided by 30 will result in 1,000. I'm giving you an example, okay, into 15. But now the act itself says 26. Hey, who is it? Padmajyoti?
Yes, sir. For that question, actually.
Yeah, Padmajyoti, go ahead. There is this question about EE and EEA.
Actually, this section is only applicable for the first-time home loan buyer, actually. So, if an employee once apply eligible for 80 EE, then he might not be eligible for the 80 EEA.
Okay.
He can. Yes, sir.
Sorry, and since we are running out of time, Padmajyoti, is it okay if we can send a write-up to Sri Sailam? I think she has asked. So is it okay if we can send a write-up to her? Can you please take care of that?
Yes, sir. I will take care of that.
Wonderful. So in brief, what you're saying is who can avail 80 EE cannot avail 80 EE. Correct?
Yes, sir. Yes, sir.
Yeah, got it. Yes. Okay, so please send a write-up later. Huh?
Okay, sir.
So we were talking about the impact. So here your per day wages itself is going to increase, because 30,000 divided by 26 is not 1,000, but it is 1,000 something. So that's the impact. Higher outflow of gratuity. First impact. Second impact is on these. Clearly, there are more number of people who will be now eligible for gratuity versus the Payment of Gratuity Act, which is currently in force. So that will increase our outflow towards gratuity, and probably the government has understood that employers will have to pay more gratuity, and hence they have mandated that employers take insurance. It could be so the impact of the second question is that you will have more number of people who will be eligible for gratuity. The impact on the question number 3 is that if the wage ceiling continues to be 21,000, we are still awaiting that information, but as on date it is 21,000. If that is so, then more number of people will be eligible to get ESI benefits. That's the impact. So there will be higher number of people, higher contribution from the employer side, because more number of people will come under the ESI bracket if the 21,000 wage ceiling continues. But what we are very clear is that the ESI eligibility will not be based on gross salary, but it will be based on wage. So this is, the impact is actually to the end user, a bit of reduced taxes. Some of them asked me if there is a co-pay for a medical insurance, and there is 5% co-pay or 10% co-pay or 15% co-pay. Can we use that value here as medical expenses? And we did clarify to earlier in another webinar, not on this, that we can, because that is a legitimate medical expenses that you are doing, and you are not getting that reimbursed from the medical insurer. So you can definitely do that. But if you are actually getting money reimbursed, you should not claim double benefits. If employer's contribution to NPS exceeds 7,50,000 is chargeable to perquisite taxation rules. Here the impact is higher workload for us. For employers, we'll have to run these calculations in the month of March, because now You have to, calculate the PC and the TP, and then you'll have to charge it to tax. The challenges are abound. There are a lot of challenges, like, for example, how do we collect this opening balance and closing balance for employees? Will employees give that data? I mean, the challenges are just too many. So these are the impact in terms of the questions that we discussed. There are a couple who had good scores on this. There's more of an information about having 2 passbooks. The 2.5 lakhs is not for the employer; it is for the employee's contribution. Okay, PF plus VPF or only PF, any of these combinations. If the employee contributes more than 2.5 lakhs, the responsibility of paying that additional tax is in the hands of the employee. For you, it is just FYI for your information. Update number 2 is about this. This opens a big Pandora's box. This will open up a lot of challenges. We will have to see how the Provident Fund department responds to this. And then update number 3 and 4 are more on items that you should be doing rather than anything else. Okay, so I think we saw this also. Tax payment by 30th April, Q4 returns by 31st, and Form 16 issuance by 15th of June. Before you guys leave, I would like to state we are 13 years and young, 153 clients and counting. We manage about 12 lakh transactions every quarter. Fantastic accuracy rates. We are there in 16 cities and we have 4.76 lakh Form 16 issued. We work in payroll, taxation, compliance, and accounting, and we run this webinar every second week of every month. Most welcome for you guys to join. Those of you who are on YouTube, who are on Twitter, who are on LinkedIn, next time, if it is possible, please join on Zoom so we can have a lot more engaging conversation. With that, I have the last item. This is the job that I'm supposed to do. So you have your feedback and sales poll. Happy to receive your feedback. Please spend a couple of seconds on the feedback. It will help us improve what we do here. You know why we do all these webinars and these knowledge sessions is predominantly to share the knowledge that we have, because we believe that we are all in the same industry, the industry of HR, the industry of payroll or finance, whatever we call it. And then truly knowledge is more valuable when we pass it on. It is not when we hold it together, right? So thank you for supporting us in our endeavor, and we wish to be as knowledge giver as possible. Thank you. I'm here for for a couple more minutes. If you have any questions, do put them on. Please connect with me on LinkedIn. We have a small, very simple YouTube channel. Thank you for the session. Very helpful, especially the Q&A. Helps a lot. Thank you, Shruti, for your kind words. I'm sure we will try to innovate of how we can do the learnings and the interactions better. Kavya, thanks a lot. Thank you, Himani. Thank you very much to you too. CE000158. I'm sorry, I didn't get your name. Thank you for your feedback. Sri Salem, yes, your EE and EEA question, one of my team members will send out. Harsh, thank you, Harsh. Yes. Missed your prior sessions, we'll try attending it further. Please, most welcome. This monthly update is regular. It's absolutely regular. It's we try to have it either on a Wednesday or on a Thursday. So enjoy. Requesting you to cover more points. Many of them, actually say that there is so much that you talk. So do you really want me to cover more? Who said that? Neela, yeah. Okay, sure. We'll try to do as much as we can. Wonderful. Guys, 79 participants have polled. It's just about, couple of questions. I mean, couple of seconds you can take. Yes. Thank you. Thank you very much. Mumun Sarkar, very unique. Munmun Sarkar, very unique name. Thank you. Thank you, Akash. It was a good session to make ourselves updated. Thank you. Kirti, thank you. Thank you, Kirti. Wonderful. Thank you in that case. Thank you very much. We look forward to meeting each and every one of you again. Have a wonderful day ahead. Where to connect for more questions? Yeah. Put them on. Send them. You have my LinkedIn profile, so you can ask questions there. Or there is also a WhatsApp group. I don't know if you can. No, I don't think you can ask questions there. LinkedIn. Thank you. Bye-bye. Have a wonderful week ahead, all of you, and see you soon. I will request a session especially for manufacturing sector payroll related seasonal. Sure, we'll try to do that whenever it is possible. Please share WhatsApp link. Yes, my team will take care of that. Yeah. Oh, sure. But the WhatsApp group is not for asking questions. Only admins from relativity side can post. But then that there is some kind of knowledge that we always do. We also run a quiz. I think how many weeks have we run it, Divya? The quiz on LinkedIn. How many weeks have we run it? I think I missed mentioning that. I think we've run it for about 50 weeks or something. I don't know. So that there is this quiz that we run on LinkedIn with interesting simple questions that are there. So if you follow Relativity's LinkedIn page, you can definitely participate in the quiz as well. 49 weeks, right? So 49 weeks and strong. We just have 3 more weeks to complete 1 year, and they will also give some kind of insight to all of you. Okay, with that, bye-bye.